A watch list is a carefully selected number of markets that you'll use to analyze, monitor, and focus on when you trade. So notice I used the word markets instead of stocks or currencies because markets relate to any financial instrument. So why this is an important topic for today is to put it into perspective. There are over 300 stocks to trade in South Africa. There's over 8,000 companies in the US alone, and that is just with stocks. There are also countless number of currencies, commodities, indices, ETFs, cryptocurrencies, and so on. So as traders, it is our duty to turn that mass data into a manageable list. The first thing I said is that it depends on the market capitalization. So I'm always looking at the biggest stocks, the major currencies, the largest indices, the blue chip stocks on the JSE, which has a market cap of over 20 billion. By knowing that I have the highest market capitalization markets, I know that there will be enough liquidity, there'll be enough volume, and there'll be enough trending moves in the markets that work perfectly with my strategy. But the second criteria is that I look at where stocks trade over 500,000 shares traded per day. By this, I know that the market is not going to be too volatile and gap too high or too low, and I won't have to worry about too many jumps between the buy and sell or bid and buy price. So liquidity is very important when it comes to choosing your watch list. And the third criteria is what I call healthy and unhealthy stocks. So the first important thing is that there's average size candles in a healthy chart. The second thing is that there's low volatility, less jumpiness. The trends are clearly moving up, down, and sideways. Notice that I also look for healthy charts that move sideways. But the most important thing is that there's little to no gaps. The unhealthy chart, as you can see, there are huge or tiny candles. There is high volatility, so erratic moves. There's no trend, and there are many gaps inside. Forex, when it comes to Forex, I will not trade any minor currencies. So minor currencies are anything other than the major currencies. There is no right and wrong, and I do not. Other Forex that you won't trade are ones that have high gearing. So I will refuse to trade markets that have a high gearing where you can lose a lot more than what you put in depending on the margin.